Recently, several stocks have gotten pummeled following their first quarter 2024 earnings, causing investors to wonder, is this some sort of macro slowdown? Is this some sort of company-specific issue? Are they now potentially bargains? So we're going to cover that for these three different companies. If you enjoy educational investment videos, you're watching Unrivaled Investing, please make a point of hitting that thumbs up, hit that subscribe button. The three companies are Dell, losing 20% of its value today, MongoDB losing over 20% of its value today, as well as Salesforce.com, which lost, roughly 20% of its value in the last 2 days. It's rebounding today, but you can see over the last few months, it's down. So what's going on with these three different companies? Let's start with Dell. Dell is talking about, look, they are helping power the AI revolution in terms of hardware. They talked about how AI demand was exceptional with $2.6 billion of AI optimized server orders revenue. So they're talking about this is great. Look at this. And you do see, and you've seen, some articles talk about how Dell escapes NVIDIA's shadow as its own AI tailwinds accelerate. So investors over the last few months have increasingly thought that Dell is some sort of AI play. But the reality is that it is still a hyper competitive hardware play. And, the stock is down today as investors are waking up realizing, wait a second, they're selling these AI servers at near zero margins. This is a very tough business. And they, I love seeing charts like this because, these slides, because it cracks me up, like on the one hand to say, here is an attractive, let me disappear my face, attractive long-term financial model. Okay, attractive. And then at the same time, say 3 to 4% revenue growth. So you're not really, no, that's not really attractive. Really attractive is you're going to grow well beyond the industry growth rate. You're going to be obviously taking market share in the years ahead. And here's the reason why, what attractive is, wow, you're going to really crush the markets long term. I'm looking at this framework and, okay, you're talking about single digit growth, maybe high single digit earnings growth. This is not some sort of revolutionary, positioning right now when you look at it. Looking at the free cash flow of this business, because you're talking about a business that's not growing very fast. Look at the free cash flow, $6 to $7 billion of free cash flow versus $100 billion market cap, around 15 times. Not crazy cheap. It's not in the crazy cheap territory. I'd say it's interesting, not crazy interesting. Running it through AI Ticker Chat's predict feature. And I think that this framework is very reasonable to say maybe it goes up 75% over the next few years. Maybe it drops. A large part depends on, the end multiple, where margins shake out, but not really assuming hyper growth in the years ahead. So I would say not really that interesting to dive further into. I do like to see the free cash flow. Looking at MongoDB, they primarily sell subscriptions to its database software, including MongoDB Atlas. They talk about how their managed cloud database service and MongoDB Enterprise Advanced, they talk about how these are on-premise database solutions. So they have the managed cloud database service and as well as on-premise database solutions. Okay, so database software is what you're looking at with MongoDB. Very high level summary. So I want to leverage AI to make my life easier. So going to AI Ticker Chat, selecting the earnings transcript, selecting the press release, I go, what did management indicate from this call that might have caused the stock to sell off? Any commentary about the macro environment? You can check out the link below to AI Ticker Chat. First month is free. It calls out several aspects from this call that I think are worthwhile for investors to consider. It talks about how management highlighted that there was a consumption slowdown, was worse than expected, affecting different sizes of customers, industries, and geographies. They talked about how the high end of the market, customers are becoming increasingly cost conscious. That's interesting to see. And then also how AI crowding out. This is the first I've seen this, which is that there's a plausible concern that AI investments are crowding out other expenditures. So in other words, companies are saying, hey, we need to make sure we have a budget for AI. And so they're reallocating budgets away from MongoDB's offerings to invest in AI technologies. That's kind of interesting to see. I'm very curious to see the exact wording, in terms of what management is suggesting, because this is one of the first indications of a macro slowdown that we're seeing. So going to the actual text, because you can jump straight to, what was the clip here that gave AI this impression. And they talk about how we firmly believe there's a macro impact because we saw that slowdown happen across different sizes of customers, across different industries, across different geos, and also across the tenure of our customers. So both the short dated customers, the ones that they've recently signed up and ones that have been around for quite some time. They also talked about how we have close to 50,000 customers, so we have a pretty good feel for what's going on right now. We feel there's definitely a macro element to it. So this does suggest that there's been some sort of macroeconomic hiccup that has started in the first quarter. The question is this part of a recession that's starting to play out? I mean, either way, MongoDB, this is a company that used to be hyper growth, growing, 50, 60% year over year on a quarterly basis. Now it's closer to 20%. This chart, by the way, completely free for users at AI Ticker Chat. So, if you're looking for free tools, AI Ticker Chat, in addition to the premium AI offerings. So clearly they're taking market share, but when I look at their underlying, profits, this reflects a company that still doesn't take profitability seriously. Yes, they do have positive free cash flow, but when I actually dive into it, I see it's mostly stock-based compensation. They're still growing their share count at, I'd say, a pretty hefty clip, a couple percent per year. So I just don't like to see it. This is another software company that I'd argue, isn't taking cost discipline seriously. How about Salesforce, CRM stock? Well, first of all, in full disclosure, this is not financial advice. So it is important to go through that disclaimer. Also, quick plug, recently an Unrivaled Investing subscriber posted in our exclusive Discord server that, and this is a direct quote, "I've recently paid my second annual subscription. Couldn't be happier. I've profited enough already to cover the next 20 years of subscription." That's a direct quote. Then just yesterday, Eric, another premium member of Unrivaled Investing, he commented that, "Thank you again for your support with my family's financial future. You have been absolutely invaluable." Eric, I'm grateful to be on this journey with you. By the way, for those that are interested in potentially compelling investment ideas and the Unrivaled Investing subscription offering, this is the last weekend that you're going to be able to lock in the most favorable pricing ever that will be available for the premium tier. So prices are going up by the end of this weekend. Now's the time to lock it in. Looking at Salesforce, what's going on here? So once again, asking, let's go through these as quickly as possible. That's what I'm trying to do. Asking AI to review the transcripts. Give me the key data points. And so I see management's talking about how there was clear macro calling out that there was measured buying environment. So that's sort of code that customers aren't spending as much. That there was mention of customers saying no decision issues, i.e. there's hesitation and uncertainty among customers. They did see some deals slip and customers take no decision. So i.e. they weren't willing to make a purchase this quarter, pushing the decision out. But this is critical. Management did not revise down their full year revenue guidance. So this does suggest that, okay, so they're seeing some sort of slowdown, some sort of hiccup. So this is similar to MongoDB. This suggests there is some sort of hiccup. Not sure if this is a full-blown recession, because they're saying, hey, it'll pick up in the second half of this year because, we grew closer to 10% this first quarter, next quarter 7 to 8%, full year maybe 8 to 9%. So that does suggest, hey, maybe second half does rebound. So this is just a hiccup. So I would say so far there hasn't been enough with like the fire alarms to say like, oh my gosh, there's a clear contraction. But I would say for investors to be aware that there is some sort of weakness with businesses to say, hey, do I want to be making this purchase, this expenditure to make my business processes better? So that is an important data point to see, whether or not it's AI crowding out, as MongoDB suggested, or just some indecision, some weakness. What is Salesforce spending their free cash flow on? You can see over the last few quarters that they've been spending billions of dollars, $2 billion plus in the most recent quarter, buying back stock. You can see how that net tune has changed from an issuance to buying back on a quarterly basis over the past year. So they've been, I'd argue, spending over $10 billion in buybacks. That is increasingly shareholder friendly, but it's all a joke. I mean, their diluted share count is 0% year over year. I mean, this is sort of like when you have young children and they're like, look, I didn't poop my pants. Isn't that awesome? And you're like, well, yeah, it is that I don't have to go clean that up. Like, I'm grateful, but this is not something to brag about. Like, to be like, woohoo, 0% diluted share count growth, and we spent, like, how much did you spend? They're talking about how we've spent, over $10 billion over time. Like, there are companies out there, Constellation Software, their share count flat over time. Fairfax Financial, that's one that I've called out publicly. I have, a video on it. One of my top positions. Full disclosure, I own it. They've reduced share count something like 20% over the last 5 years. Meanwhile, the underlying business has done very well. So you're a big boy now. Good job, Salesforce. I'm just not. It's just absurd to me. When you start taking it seriously, then I'll start taking your stock more seriously. That's really what it comes down to. And this just doesn't do it. Thinking about the valuation around the current share price, thinking about their historic financials, growing from $20 billion in sales over time to nearly $40 billion. I mean, look, that growth is impressive, but, there has been, I'd argue a lot of offsetting dilution that management's using their free cash flow to buy back stock that they're really just using to pay employees. And so thinking about where their margins could be in the future, I'm assuming 25 to 30%. Once again, they're not there yet, but they are getting better. They are getting more serious about it. So give them props for that. Question is, what's their growth rate in the years ahead? 7.5 to 12.5%. I mean, this year they're talking about closer to 8-9%. So thinking about that, I think in order for Salesforce stock to actually have an attractive return in the years ahead, you really need to believe that the multiple should be high or could expand significantly. So I'm assuming 26 times in the future. But in all honesty, I view this as a meh valuation. I don't view it as egregious. I certainly don't view it as dirt cheap. Frankly, earlier this week, I called out to my subscribers at Unrivaled Investing, my premium subscribers and my paid subscribers, a stock that I bought that's growing at multiples the rate of Salesforce and is, targeting, an earnings multiple that's, a third, or a 30% discount to where Salesforce is at, maybe more. So I just feel like this is a type of situation where investors are just like, ooh, Salesforce, and it's getting this premium. But the reality is, let's look at the fundamentals, folks. And it's just really not, I would just argue it's not crazy compelling. Then overlay with their history of significantly overpaying for certain acquisitions, like the Slack deal. My mind was bananas. If you have a different take on it, let me know. So in this video, we've covered Dell, we've covered MongoDB, sort of high-level perspectives, on these companies. We've covered Salesforce. It is interesting to see the commentary that's coming out because this is, I'd argue, one of the first real times that you're seeing some sort of warning that, hey, the economy, there's a little bit of turbulence, and this isn't just some sort of Boeing plane. This is, there's something going on. And so then the question is this a recession? Is this starting to be, is this something that's going to turn into something much worse? Or is this, because they're clearly saying it's not just us. It's not just our execution, because they do make a call it's not like our competitors are taking market share from us all of a sudden. So this is something for, I think, investors to be aware of, that if you do start having a recession, then I think valuations could really get walloped. So I think it is worthwhile to be mindful of all these different data points. I look at these 3 different companies. None of them scream out deep value to me. If anything, a lot of it just sort of speaks to where we've been historically, which is hey, we don't need to take, profit margins seriously. That would be the case of MongoDB. Case of Salesforce, we don't need to take our share count seriously. And now it's spending billions of dollars in share count and it's flat. Hurrah. And then Dell, you could paint it a different color, but at the end of the day, it's still competing in a hyper competitive hardware business. So anywho, I hope this video, calling out these different companies has been helpful. If you have a different take, always would love to hear it. I'm learning just like you are as well. So feel free to leave a comment below. As just the last reminder, this is the last weekend where the price of the premium member at Unrivaled Investing will be where it is going forward. It's going to be higher. So feel free to check it out if you're interested. Thanks so much for tuning into Unrivaled Investing.